To start, my name is Eric Arson. I'm with Silicon Valley Bank. I'm one of the co-founders of Startup San Diego, and I've been in San Diego pretty much all my life. Three-time entrepreneur in the data space, the CRM space, and then left to join the venture law firm of Cooley. From there, jumped into Silicon Valley Bank, and yes, we're back, and it's very nice to be back, and it's largely thanks to all of you. So with that, we'll go ahead and introduce the panel. I'll let you introduce yourselves, and why don't you take it off, Price?
Awesome. Hi, my name is Price. I co-founded a startup called OpenLedger, and what we do is we're an accounting API, and so we help anyone, any bank, vertical SaaS, FinTech, or any type of accounting firms as well, build their own accounting products to offer to their customers. And so this was inspired by my last company that we just sold to Coinbase, that we did stablecoin invoicing for a range of different customers and clients, and just seeing that there was a really exciting opportunity to widen the suite of services, especially if you're building a great tool that solves accounting problems, why not bring the general ledger to the whole suite of the product? And so we just announced our seed led by Kindred Ventures and Blank and some awesome great angels, and we're excited to get off to the races and excited to spend this weekend with y'all. So, not passing.
Yeah, my name is Mook Venkatesh. I'm at Plaid, a big infrastructure open banking provider. I run our go-to-market strategy and operations, so all the things to do with our sales and marketing motion. Been there for about 4 years. Before that, ran a startup in the digital lending space, small ticket loans. Actually, we were headquartered here, but our core market was the UK. That's where we had all our regulatory licenses. Yeah, and then before that, was in the semiconductor space. so a little bit of a change, but FinTech last 15 years.
I got to tell you, it's funny. I know your company. We talked about it. Just by chance, I'm having dinner with Michael Thiemann tonight. Michael Thiemann, San Diego has a great deep history in the finance
we've got FICO,
data space. Yeah,
former HNC, now FICO. There's actually quite a few digital lenders out here with deep credit science.
And they're willing to help you, so use LinkedIn or connect with one of us, and we'll try to help you.
Yeah.
All right, I'm Tim Lee, founder and CEO of Leni API. My co-founder, Sam, is in the audience. We're from Orange County, Irvine. Congrats, Bryce, on your seed round. Just happened 2 days ago, so yes. It's really cool. I was on the phone with him, actually.
We were the first to know.
Yeah, that's right. We were on the phone with him. He's like, "Oh my God, the news articles came out." I'm like, "You do what you can do. We're gonna carry on."
TechCrunch scooped us. It was not.
It was crazy.
It wasn't that
It was
fun.
crazy moment. Yeah, I witnessed history there. But we actually all know each other. I'm really pleased that we know each other for actually a very long time. FinTech is a small circle, so hopefully we'll see a lot of you guys in the future. But my career is all 20 years of banking technology. I started my career in semiconductor as well, building microprocessors for Intel. I should have stuck with that, but whatever, man. Yeah. But anyways, happy to be here. Just really pleased to be part of this panel. Thank you.
And Tim's humility prevents him from telling you that he also recently raised with Interlock, who is one of the big
Capital.
partners.
Yes, our VCs in the room. Yeah, we raised a cool $2.5 million seed round as well.
And just to make sure, if you don't know Interlock, it is, I would argue, the largest or second largest, because our friend Denise would argue with me as to the most active seed investor in San Diego.
To bring it home, I met Sam through one of the Interlocks events during COVID. It's crazy. Yeah.
Perfect.
Thank you.
Yeah. Good for you. Hi, everybody. Kerry Ransom, also from Orange County, so just up the road. And after being crazy enough to do, I think, 8 startups, I finally came a little bit to the other side, and I would say I'm sort of a hybrid parallel entrepreneur and a little bit more investor these days. But my primary job, and I guess the context for this, is run a fund called BankTech Ventures. We're a 3-year-old fund solely backed by banks. So we have just over 100 banks around the country that are our investors, looking for us to go source really interesting companies like this that will make their banks better. And so we go out and find companies that are doing interesting things to keep banks relevant and efficient and strategic, and ultimately catalog all those and make investments in the ones that we think are going to be the ones not only to make banks better, but also be good investments. And so we've made a couple dozen so far out of our first fund and are just kicking off our second one right now.
Okay, so fair warning, I'm going to start with you, Carrie, but I'm going to give a little bit of background so as you get ready for giving us kind of the outlook for 2025. As may be helpful, I think, to sort of bring the conversation together, the items that we're going to be talking about from a technical perspective that are enabling the opportunity are typically, data analysis, otherwise known as AI. I say data analysis because it's not necessarily new, it's just much more powerful today. And then, of course, you have digital coins or the disintermediation of currencies. And then, of course, blockchain, so you can track things. So these three tools, and then the rails on which money can travel. So we're no longer locked into the old school ways of transferring money. There's many more rails that you can do it on. There are some challenges to that, and at the end we'll catch up on regulatory items. But if those are the main things I think will bring opportunity to you, and so as we talk about those, if you have a question about that, certainly do raise your hand if you haven't heard of those things. So with that, what's the outlook for 2025 look like?
So I think it's going to be really positive. And, I've been immersed in the middle of banks now for 4 years. And if you think back 4 years ago, we were kind of still in COVID, and banks actually had a huge amount of liquidity. So there was a lot of money injected into the banking system. Think about PPP, and you think about a lot of the relief programs, and people that weren't spending money, it just started to stockpile. And they were feeling great, and then interest rates changed, and money got spent off. And so now you're at a place in the last 4 years where banks have just been whipsawed. Like they're just beat up. The regulatory environment of the last few years has been really difficult. You've seen any bank that was trying to do something interesting, whether you were aggressively trying to do something in crypto, you got hammered, if not put out of business. If you were trying to do sponsor banking, which if you're a FinTech or you go to that panel, generally you still need a licensed institution or some sort of regulatory approval to do things. Most of those banks have been slapped around. And so it's been pretty rough. I think this new administration and a lot of bankers are very hopeful. I happened to be at a banking conference the day of the election, and you've never seen a group of people so giddy about what their next few years might look like, because they just feel like they need some relief. So I see a lot of optimism. I see a lot of pent-up demand to do stuff, which is good, because I think that then tends to bode well for entrepreneurs. Because we need counterparties, or we need partners on the other side. And so that's sort of the general outlook. And then the other thing that we're starting to see is this replacement cycle of technology. And one example, you talked about payment rails. The movement of money is going to continue to speed up here. And if you think about this desire for real-time payments, it's happening more in other parts of the world than here right now. Real-time payments brings real-time fraud risk. Most people are not set up for that. Part of the delay in the movement of money has allowed people to be a little bit more complacent and reactive around things like fraud and risk. And so that is going to introduce a whole new set of operating processes. Like, we need to be proactive about underwriting risk in stream. We need to be proactive about how we look at authentication and all these things that people are just starting to wrap their heads around. But with that, I think there are massive amounts of innovation opportunities. And so as aspiring entrepreneurs, there is a huge need for a lot of wholesale replacement of banking technology. And that's sort of what we are investing into over the next decade.
It's great you mentioned the banking technology that's now available to companies. If you look at, as an example, two San Diego companies, House Call Pro and Cloudbeds, started in the service industry and the hospitality industry, but as they started working with their clients, who are largely, their clients are largely using credit cards. And so credit cards, of course, you've got this 2.25% to 3% margin that is really attractive to try to capture and bring into your own company. But you have these SaaS companies that are now becoming sort of payment processing companies, so they can capture that. But it's really interesting because I think too, perhaps your company, Tim, can help in turn, because you've now, as you're doing that, you've got to either outsource that to somebody who's going to take that risk of the chargeback when somebody disputes a charge and the fraud, or you've got to figure out, okay, how am I going to start managing more of that myself and taking the responsibility on our side? But I think the two of you maybe can speak a little bit to that.
Yeah, just going back to what's happening last year, this year, we're a technology company. We help fintechs and banks to run, high-speed analytics, underwriting, fraud detection, things like that. And we thought we were pretty good with our stuff. And when we go to SoFi, when we go to Avant, when we go to these, large fintechs or banks, there are requirements that you got to do, hundreds and thousands of computational cycles within 200, maybe 250 milliseconds. So it challenges us as a startup to say, hey, we need to go out and build something really cool to do maybe 1 billion transactions a day. So that's what we need to do to be even relevant in 2025 as a fintech startup, to even to even play with some of the clients that we're meeting on a daily basis. So we're in some ways every day we're being pushed by our clients to get better, and their expectations that you should have this already. So it's kind of daunting, scary, but it's challenging and fun at the same time. So we're building something that's really cool that can actually take in all these applications, run thousands of applications at the same time per second, which we didn't think that was actually needed, but it's expected now. Crazy, right?
Mook, your thoughts?
Yeah. So we're kind of at the intersection of a lot of things fintech, because if you're building something a fintech stack, you typically come to a Plaid or a Yodlee or somebody like that. I guess for us, 2025 big themes. First of all, I think fintech is back. It was we were going through a post-COVID slowdown. I think I don't know if you saw some recent articles, but we called it a fintech spring. So that's encouraging. I would highlight 4 kind of key themes that I'm seeing. One is fraud. It's not just sufficient to do simple identity checks. There are now a lot of alternative data sources that you can pull to cross-verify. And so Plaid is getting a lot of interest about some of our ID solutions. That it's not just about name, it's about verifying multiple sources of information before you onboard a customer. The second is cash flow underwriting. So before, all typical lending is done on the credit score, but people are starting to wake up to the power of the bank statement and its ability to open up to lending more to other individuals that you would otherwise not do. The third is payments. In fact, that probably should be number 1, because I think that's what's driving everybody to effectively be a fintech. These companies that are B2B SaaS companies are actually B2B payments companies. That's where most of their revenue is coming from, and most of the interest. And so we're getting a whole host of companies that you never think would be interested in fintech, thinking about fintech, because it's about taking out cost, accepting more customers, creating a better customer experience. Shipping, logistics companies, things you'd never imagine are starting to become fintech, and that to me is what this spring is about. And then the fourth thing I just highlight is banks. Banks before used to be, at least for Plaid, a little bit of an adversary, but much more now they are partners, and they are adopting a lot of the same technologies that made many of our fintechs like Chime and SoFi successful, because they realize that they need to deliver a really strong customer experience. And so we're actually seeing a lot of interest and movement from banks to kind of strengthen their offering to compete with the likes of Chime and others.
Yeah, I think our perspectives and theses on what we're working on at OpenLedger kind of take a lot from what has already been said here. But I think kind of following up on those points of like what we were describing on House Call Pro, and what was the other company you mentioned? Cloudbeds, right? So both of those companies now serve as the sort of first front-end layer for these specific verticals that they work with, right? And so when they do that, they have essentially like built a better experience to engage with the general business operations of a company as well as fintech in a way, right? And so those companies have essentially become competitive with banks because of how good their business management solutions are. And so part of our thesis right now that we're working on is that banks have to get better at business management solutions, or they're going to eventually lose to the house called pros of the world, right? And it's a similar thing that's happening with QuickBooks, right? QuickBooks and Intuit are growing so large, and they've been large for a long time, right? But when they turn on the switch, right, of now we do banking, now we do payments, now we do invoicing, now we do lending, right? It's really an interesting dynamic where now they are almost cannibalizing so much of their ecosystem where they're competing with banks, they're competing with vertical SaaS companies, they're competing with invoicing companies, right? And all those companies are going to need to eventually find a way to either build out those things that like they were previously relying on and become almost these closed ecosystems that exist by themselves. And we're just like very interested in sort of watching this dynamic play out as we're moving forward in like this 2025 when there's like, you know, more liquidity in the markets, more range for people to try things and build products. It's this whole new range of like competition of people to try things to figure out, okay, what, and I'm largely speaking on the SMB and SME markets, like what is going to actually get these people to move payments and bank with us, right? And largely, you know, our thought is that helping build better ERP solutions alongside these payments and banking solutions are what's going to drive that.
Yeah, I think just the perspective that we're trying to take on this is the banks recognize that they have to add more value. And I don't know that, I mean, I have banks that are literally building SaaS and saying we need to have SaaS revenue, we need to diversify away from net interest margin, which is the difference between what do you pay somebody who gives you money and what are you making on loans that you're making, right? And that they need to diversify away, but it's really about recognizing we have to find ways to add value. And so they're starting to dip their toes in. And usually that means we've got to focus a little more because we've historically been open doors to anybody who walks in the doors into our branch. And now people don't think of the physical branch as the likely place to do banking in 20, unless you're maybe, you know, my parents' age or something, and you're habit formed. But now you have, we were talking about this before, you have every bank that has a digital presence is in your potential consideration set. And so why is someone going to choose you is a new question that they all are wrestling with. And,
Exactly.
and it's a whole bunch of different reasons.
Yeah, there's like maybe 50 banks right now that like, oh, we'll do your but like neobanks where like we'll do your bookkeeping, taxes, invoicing, right? Or all this random stuff, right? And it's like it's not even that random. It's more so this idea of like, oh, we'll hook them with one, but then if they can fall in love with the experience throughout the whole stack, then that means they'll just stay for everything else, right?
It's interesting because this suggests that, and perhaps it is, banking becomes a commodity. Because again, all these companies that are offering services to other companies, B2B, are starting to get into the banking stack, are starting to get into, if you look at credit cards, for example, very competitive space. A lot of banks were caught off guard initially by Brex, and now perhaps it's Brex and Ramp. There's others too. But for what you're just making a comment on is, it's no longer just a credit card. You have multiple credit cards. You have a travel and entertainment platform so that you can capture their seats and you can set budgets and have your team, when you grow a bigger company, be able to go do travel without calling somebody in the marketing or the travel department. HR, when they come in, someone gets a new credit card right away. So that's an example of how some of these functions that banks typically did and weren't touched before are starting to eat away. And so that's very right.
Well,
Like,
and that's
how do we
a
differentiate?
perfect example of, you know, we had to actually show several of our banks how much money was being spent by their commercial clients on cards that weren't theirs. And, you know, that was data analytics to show them. And then once they said, oh, shit, are you kidding me? Then we said, we're going to give you a solution so now you can put your brand on it and compete against the Brex and the Ramp and the Amexes and others, and actually have a better total solution. And it's part of the bank umbrella, and it's not. And so to the extent the customer does still value that holistic relationship and a true bank behind it, as opposed to trying to determine whether it's a bank or not, because some people do care about that. But it's about reducing friction and adding value.
And we're talking, there's almost two types of banks. There's the retail bank where you might personally bank, and then there's the B2B bank. They're going to want a little bit different things, but just curious, how many of you have been to a bank that weren't looking for an auto loan or a home loan in the last year? Yeah. So a few folks, yeah. And how many of you in the room are interested in starting either a FinTech or a BankTech, or are involved with such a company? Okay, great. So I expect questions from all of you in about 15 minutes. That's your heads up. And then last, I'll throw a little bit of maybe a tip here is, if you aren't getting 2% back rewards that you're applying cash to your account, please do that. Don't play with all the other reward things. Don't waste your time. There's only about 2.5% that you can really play with anyway. The bank's going to take a little bit. Everyone takes a little bit along the way. So if someone tells you they're giving you 5 rewards and it's only on one thing, it's going to average all out to 2%. So personally, go get whatever card from whatever bank. I can name one, but you can find it from the card guy online. Get your 2% back in cash. Forget everything else, unless you travel a ton, because that's an exception. The Sapphire card for people that travel a lot. I'm not pitching the Sapphire card, nothing to do with them. But, and then on the corporate side, same kind of thing. Like I talk to people and I say, look, don't play with the rewards. You can give rewards to your employees, but there is potentially a tax consequence. But more so, just have the cash back into your account, and then you can decide whatever reward you want to give your employee. So that's just a side point. It drives me nuts that people don't take advantage of that. So there you go. Okay, so then back to this space then. So and from the Plaid perspective then, when you're looking at the large opportunities that your clients or the prospects that you're looking at out in the marketplace, we talked a little bit about some of these companies are trying to get more into the flow fund space. What are some of the hazards or things that you find, we really want to move forward at the speed of entrepreneurship, but yikes, we found that this is harder than we thought?
Yeah, I mean, I know everybody hates on banks because they're slow and whatnot, but I actually think the reason they're slow is they're doing a very important service, which is protecting your all's money. There's a lot of, I don't know if you guys have followed the Evolve Synapse thing, but there's a lot can go wrong, and when it comes to consumers' money, it should be treated with the regulatory safety net like an airplane, because that is why it's so important. So of course we have been, there's a lot of regulatory information coming down. I don't know if people have been following 1033. It's all about how data is shared, who has access to the data, being very clear about the permissions. It's kind of going to GDPR in the UK, which is just very, very customer friendly. And so we're spending a lot of time when we onboard customers, B2B customers, businesses that then go and serve customers. So we call, we want to make sure that they're using the data appropriately. We audit the businesses to make sure they're not taking the information in one way and using it in a different way. These are all very important safeguards when you're dealing with people's money and their banking information. So I'm not sure if I answered your question, but things probably, we're not moving fast and breaking things. We are definitely taking our time, and then when we work with banks, there's a lot of work. There's both the work on the supply side. They provide through APIs the data that is critical for these apps, and then when we work with the customers who are then serving end clients or consumers like us, we work very closely around their regulatory framework, the way they're handling the data. A lot of being careful.
Yeah, and Tim, you mentioned that when you were talking to some of the banks, it actually took a lot more work. There was this big wall you had to climb over in terms of proving the software. I'll give one quick story. In 2021, we worked with a San Diego company that's in the FinTech space, and all they were doing was trying to pull APIs, get data from us. And it's shocking, but they ended up pulling the data. They had a recurring error in their code that was pulling it like thousands of times per millisecond, and it crashed our system. So for all of our clients, they suddenly couldn't access their data in this one feed. It wasn't the website, but it's just as critical. And then we had to figure out what it was. So we had to source where the pings were coming from. And then we found it was this little startup. And on one side, it's like you want to come down and crush them. It doesn't do any good because they can't do anything about it. On the other, they're a client and we wanted to help them, but that was pretty painful. So in terms of your experience trying to work with banks, what did you find were some of the headwinds you ran into?
As of this week, we stopped working with banks. It just takes too long for them to make a decision. I was just having a chat with Carrie, where our ICP is going to be fintechs and fintechs only going forward. Because we talked to them for 2 years, and they know what they need. They know exactly what we could provide. But it's like the analogy I want to make is like a Brazilian meat house. Everybody has one of those cards. Yep. And if one of them flips to a red, nobody gets to eat. So I'm like, okay, stop. Let's go elsewhere. And going back to the Plaid conversation is really interesting because we're essentially like a distributor of Plaid's services, right? On one hand, Plaid needs to play really well with banks. That's where the information comes in. On the other hand, everybody and their mother wants Plaid. So we're bringing Plaid we're working with Mattress King, right? So some of those banking activities are not happening in the banks anymore, or not even happening within the Varos and Chimes of the world anymore. They're happening when somebody's buying a mattress. Yeah, where the commerce is. They're doing.
And so just to clarify that for some folks, so someone's coming in to buy a mattress, they're no longer using their credit card perhaps or getting a loan. They're getting a loan directly with Mattress King.
Mattress King is self-financing their own stuff. So we got a call from like Mattress King out of Alabama. I was like, why is Mattress King calling us? Oh, we're gonna do financing in-house. I'm like, well, there's a firm and there's Snap Finance. I was like, no, we're gonna do it ourselves, and we need your system to do it. So we're now in Mattress Kings of the world. We're in ammos and gun type of financing. Nobody wants to touch that stuff, but they're all financing these things themselves. Yeah. So now there are 3 million small businesses that is never fintech, never bank, never finance.
But each could be a bank branch.
Each one of them are a bank now. So if they're financing these payments themselves, it doesn't go through banking. It doesn't go through any regulatory regime. If you want to get cosmetic surgery done, it's financed by the doctors. But they need fintech technology, right? And part of that is ledgering. Part of that is, hey, I need to pull Plaid. Well, I don't know how to do anything with Plaid, but you guys can. So we're bringing banking at the point of need. I think that's a term that you coined actually a long time ago. So these things are all happening. So we find ourselves along with all the friends over here into when people are buying like the biggest margin at Mattress King is pillows. We had to do some special work to add pillows as a thing when they check out. So now all of a sudden we're a fintech company getting dragged into furniture, issues there.
It does. Yeah. I sort of feel like part of my job is evangelist and not to folks like this, but really to banks, because I have to be both I'm their advocate and their friend, but also have to sort of show them like this is what is happening, like what and you can ignore it, but ignore it to your peril. And just as an anecdote, I heard a guy from United Airlines who's the head of their payments group this week. We were at a conference together, and he was talking about how really part of their strategy is to push the payment to the end user, because every United Airlines passenger has a United Airlines app. And they're like, it's way easier for us if we can get them to buy or transact or whatever in the mobile app. And so if you think about that in the banking analogy, banks historically have had the opposite view, which is like, let's get them into the branch. And the reality is that's not what people want. People want it easy where
the bank should have a QR code right there in Mattress King, and they scan it and bring up the bank's app.
Bring it to me when I want it. Yeah. And so if you think about every single bank account that has a mobile app is really a digital branch. And they just haven't yet totally realized that that's where they want to move it, because customers will be happier and they'll be stickier, and they'll win more of that if they really enable it versus resist it.
Just random note, I think those just kind of odd customers in fintech, those are the best. We did a vertical SaaS for junkyards reach out, and they're like, we want to build banking and accounting, and we're like, this is awesome. Let's do it. That's so cool that you get to work with Mattress King.
There's riches in the niches.
Yes.
So, but on that price, so your product then is allowing them to get a little more information, because it's all about information. The risk from the credit perspective, not the fraud perspective, is about the information. But tell us a little bit about the types of clients you have, how they're using your product to further their products or services.
Yeah, it's been really interesting to see how things have kind of spun out and worked out, because initially we're like, oh, we'll just help vertical SaaS companies, build accounting products, right? And that had its own set of interesting challenges where, accounting is so different in so many industries. Like sometimes it's more like Excel based a lot of times, and you're leaning and integrating that back into like a QuickBooks-esque experience, but and then they just offer it to their customers, right? But then there was a group of customers that were like, hey, we just have like a really, really weird accounting setup. Like there's a crypto exchange we're working with right now that wants to build in like a transparency flow. And so they essentially want all their customers to be able to see their proof of exchange of their proof of reserves. And so we're working and that basically means like they have the money they say they do, right? And we're helping them build a flow to do that. But I think one thing that's really exciting about working with banks is this idea that banks, as you guys know, have a bunch of data on their customers, right? They have a bunch of all your transaction data, the breakdown of like what you're actually spending money on. But if you're actually running payments through a bunch of different areas, banks don't and can't have all the context, right? And when we went to a couple bank conferences, we were just like pitching the product, kind of having a lot of fun conversations. One of the ideas that really came up is this idea that like, if a bank really wants to know everything about their customers and bring it all into one place, it has to be an accounting product. That's where you get to pull in all the data, right? And from there, if you have full financial context on a company and you have that connected to like an LLM in a way that makes sense for security, there's just so many exciting areas and angles of like automation when you fully bring that financial context together. And so that's a lot of the things we're jamming on, working on at OpenLedger.
So if you think about, we start taking banks down to the app level. You mentioned apps, and I don't think there's anybody in here that thinks that they have too many apps on their phone. So we may go through, what do you think about the perspective of, we may be going through a period where your old bank account where you had one bank, suddenly I've got many accounts because I've got different types of currency in different places, and I'm facilitating not just having a payment facility at United Airlines, but my points now become a value, a real value, not how we think about it just as rewards. And then eventually we're going to have somebody like an Amazon, PayPal come in and help us aggregate that, because you're going to have a disaggregated banking relationship. Any thoughts on that and opportunities that it presents?
Yeah, I mean, I got tons, but
It's your life, yeah.
yeah, it is like you can see how there's data, like as this proliferates, data everywhere and stores of value everywhere, which is very difficult to manage, and so you are going to need something that will do that. It feels to me like, yeah, it could be an app, but I had this feeling it's probably going to be more of a like agentic AI type of setup where I may be okay, and you have this constant battle because, I mean, you take Starbucks, for example. Starbucks is a really compelling bank. Yeah. And I think right now they're sitting on it. They're supposed to report earnings, because I was talking to somebody about it earlier this week, and they usually report what their balances are, but it's like in the multiple billions of dollars that they're sitting on, which is essentially bank deposits that they are sitting on. And they are really demonstrating what a wallet of sort of today and the future can look like. And I think we're going to see some of this like wallet interoperability that's going to have to happen. And maybe that's what ultimately does get people to use more blockchain or other mechanisms for helping to translate or help people move things about. But it's, it remains to be seen how that's going to happen. But I think it's an inevitable need because of this proliferation that's occurred, right? There's, I got money in places I have no idea because I experiment, but also, things happen. Like you buy something through somewhere, maybe the credit goes back to them. It doesn't go back on your credit card or doesn't go back into your bank account. And so all of a sudden, it is an unmanageable current situation.
Yeah, I mean, we see an explosion of apps, just given all the functionality you can turn to fintech towards, given now AI and its ability to create even more amazing experiences at the point of sale or at the point of some financial transaction. Our vision is that, yes, some vertical or horizontal layers will develop, like a pay by bank layer. Instead of Visa, you can pay by Plaid or something to that effect. And that might also apply to your other parts of your information, your bank account. There might be some passports that start to develop. That's your financial identity, if you will, which you can carry around. But I don't see the number of apps on your phone going down. It's only gonna go up.
It's like the nightmare of gift cards. How many of you have more than one gift card that you've been given in the last year, and you have a stack, and good God, all that money is just sitting there retiring. I don't even know. Is there an accounting rule of when you can retire out that off your books? And
it depends on some states. No,
forever. Yeah,
there's different rules.
Yeah,
and the consumers usually don't know. Right?
That's right. Yeah.
So
Want to open it for questions. I'm going to give it a quick thing just as information for entrepreneurs that are looking at opportunities that we've since talked about here. A couple of the regulatory things just to be aware of. You can ignore them at your peril, but don't be so strict that it stops you from doing your idea. Number one is going to be KYC, know your customer. That's basically, it's put by the government so that we know who's putting money in the system. I'm on the bank side, in the bank and out of the bank, but we have to know both the in the system and out of the system so that you prevent AML, anti-money laundering. So all these things are meant to protect us initially, but if you're going to have any sort of a value holding gift card, tokens, cyber currency, and you're going to have ways for people to purchase the value and sell value into real money, you're going to have to think about KYC and anti-money laundering. And then the second, which is also complex, but it's when you talk to your advisors and your attorneys, talk to your advisors first, they're cheaper to speak to, is a money service business. And that's when, if you're moving money, and this we talk about the SaaS, a lot of SaaS people want to get into this. A good example I'll give you is we used to have a company, it got purchased, but Take Lessons in town. Stephen Cox, great entrepreneur, historical guy. And you'd go, say, for a guitar lesson. So Take Lessons helped you schedule it. You could pay for it on Take Lessons. So, average person pays for the guitar lesson, goes to Take Lessons. Take Lesson then pays the guitar teacher. That money has now flowed through Take Lessons. So they have pretty significant financial responsibility. And when you think about your business ideas, it's okay. Those are great ideas. But be sure that you talk with advisors and your legal counsel before you start doing those things, because it can come with penalties that can kill you later. Or if you walk into an investor meeting and you haven't thought about it, you're looking pretty silly. So enough of that boring stuff. Any questions from the crowd? Start in the front, yeah.
Yeah, I have a question for Tim. So you talked about how you're working with, mattress firm and consumer focused companies to debank and help them self-finance their transactions. Aside from the objectives of stabilizing their cash flows and earning interest income, do you see any of them repackaging these loans and securitizing them and passing them on? Is that even possible outside of the traditional banking system?
he's gonna have to do it for them.
Yeah, well,
Is there a fintech structure there?
there could be. Securitization usually look upon longer term loans like a mortgage or maybe a 36-month consumer personal loan. These short term 4 to 6 week pay in full, these BNPL kind of loans, they're just funded by local banks or even private equities or family offices. There's not enough interest income long enough for folks in Wall Street to kind of sit there and watch, you know, a couple of pennies here and there to come in to play. So, but there could be an opportunity where you can, you know, you can take all the BNPLs, right, on the planet and securitize that as a product, but you're gonna have to feed that into a vehicle almost constantly to keep Wall Street happy, you know. But it's a possibility.
There's always a desire because it's a way
If there's a yield,
to scale for people to risk manage. You know, so there's always a potential there on that side.
it's a lot of work, but
firm actually put out is trying to do some of that.
Probably.
those are the Peloton 5-year loans. Yeah.
Yeah. But people try. I mean, it's a balance sheet management. Should do it. Yeah.
Go ahead.
Good question.
Hi, I'm Olivia. I have a Salesforce engineering firm, and this is a question for kind of all of you guys. I'm trying to niche down into FinTech and market FinTech within Salesforce as a CRM, and I didn't know if any of you guys had any thoughts on packageable or things that you would like to see in your CRM that we could build to maybe sell over and over again for FinTech companies, or even maybe you have something that you utilize within your CRM right now that you don't really like or you really like.
Banks are begging me for a new, better CRM.
I'm sorry, say that again?
Banks are begging me for a new, better CRM.
Okay.
I'll be happy to talk to you right
They
afterwards.
don't love sales.
I
The
work
ones that are on
all the time.
Salesforce don't love it, so they need a further customization if they're going to stay there.
I do have a lot of FinTech that have Salesforce, but they need so much customization, which is why they come to us to build it. But it seems to be extremely custom and niche.
Yeah, we use Salesforce. Our biggest issue is we've got I think we've proliferated to all these different tools that are now bolt in, and some are useful, some we don't run proper enablement on, and so it just gets not used. I think the big area for us is actually data enrichment. So think about the tens of thousands of businesses you want to sell to. Just being able to go in deeper than just their LinkedIn or Zoom info, getting really strong demographics about the company, so you can almost say, okay, we really win in this subsegment. Let me find companies like that so I can go target those. That's one area. Another area we've started looking at is, I don't want to call them the AISDR, which I think is not going to do very well. It's more automated dashboards to inform the AE, the salesperson or the account manager, what are the next actions they should do. We're kind of building in-house dashboards based on their portfolio of accounts. What should your next best action be, if you will? And you can start thinking about a lot of interesting AI agents that go in, grab usage data or grab whether anybody in the account visited our website. There's just a lot of things to go and pull to make an intelligent, timely choice about when to reach out to the customer. So, yeah.
Any other? I know we're getting to the end. I got time for one more. Go for it.
Yeah, hi. You said you were with Cooley in the past?
Correct.
Yeah, in 2015 I sold a company with you guys.
I hope we were helpful and didn't charge you too much.
Yeah. But anyway, I'm back in the game and just kind of starting a new, essentially getting gig workers paid. And it's an open-ended question. Literally, like, I'm debating whether to go to Silicon Valley Bank and try to get some and raise funding, just like probably many of us here. What is your just general recommendation? I'm coming 10 years, working for my employer. I was at the hire now, I'm free, but still have this opportunity with my employer. We have a potential client where we're just like they have 1,000 people that just need to get paid and manage it. Open-ended question. What's your thoughts? How to get that?
I think your question is more of a fundraising question. It is, I need a bank. So I'm going to say one thing because a lot of people think of venture banking. SVB, those are the guys that give me money before I get my venture round. No, it's a bank. We need collateral. We only make a couple percentage points on what we're lending you, so we need to make sure we get our money back. And I think a very helpful diagram is if you look at the efficient frontier, if you've ever talked to a wealth manager or taken a finance class in the MBA, Efficient Frontier shows the difference between the rate of return that you get and the risk, the deviation that you take. And a lot of it's a little curve, and it usually has bonds and stocks, and it tells you that the right mix is probably to have 20% bonds, 80% stocks. Some of you are going to have more risk. My angel friends in the crowd, they don't want to get an 8% return. They want to get, say, a 2x return. So they're way out on the graph. My VC friends are going to be 10x out there. The bank is down here at 3%, so they need to make sure that they get their money back. So they're always going to hit you up for what's the collateral, how do I get my money back? So that answers the, do you need SVB? Maybe, but I don't have a chest that we can pull out an investor for you. So then the second question I heard there is, I'm currently working, I'm doing my startup. When should I jump out? Because I've got my paycheck and, no, sorry.
No, I'm totally independent of the
Okay.
relationship, and I am working with my old employer to create this new product, get workers paid. That's kind of the idea.
Yeah, there's a lot of demand. There's a lot of gig worker, early wage access kind of apps out there targeting gig workers. Perfect. You know, there's a lot of regulations right? Regulating early wage access. You got to have a bank to go nationwide. Otherwise, you have to have a state-by-state lending license, and that's prohibitive. That's really expensive to get. And in California, I think I read some books like you can only charge 10% interest rate, and all these active hours of the world are all got their hands slapped by state regulators and federal regulators that you're not supposed to charge any fees. If you are, you got to be disclosed with a full TILA. So there's a whole slew of issues. You know, it's lending basically 101. Whether it's payday, maybe even that. Right? So there's banking, there's compliance, there's rails, there's a lot of different things, but there's a lot of technology out there now. If you look at Argyle Trove, they even have give you an interface to log in directly into the Uber app or whatever it might be, right? You can download the entire driving history and earning potentials, and you can lend against that. So there's a lot of that out there now, but I think it's an unexplored market. 1099s, if you explore all that, you can give them mortgage products and all that stuff in the future. But
and I think the only thing I would add, I totally agree with everything Tim said, is just understanding what's the actual problem that they have or that you're trying to solve. Because to his point, there's no shortage of technology out there, and this is more entrepreneurial advice. Like, builders love to build, and I tend to give the advice of, like, don't build it until it is absolutely clear both what it is and why the heck you should build it, because people are begging for it, and it's way easier to build stuff today, especially in FinTech, than it's ever been. And that's usually not the problem. The problem is understanding the customer need and how this is going to be a good business or not, and what the risks are. Is really more of the solve.
In doing the work and then getting paid. There's all sorts of opportunities within that 60 days, you know.
For sure.
Well, you got the hardest part down. You got 1,000 people who are going to talk to you about a problem they have. So, something cool is going to happen if you stick at it.
Agree. Totally agree.
So as we wrap up, and forgive me, but I'm going to tell you that the reason that we're all here is because we care about you all. We want to share our information and help you get to the next level. So if we didn't get to your question, you have permission to hit us up on LinkedIn. But we also have jobs. We have a lot of people that hit us up on LinkedIn. So please don't just connect to us. Give us a sentence as to, hey, heard you at this thing. Here's my question, and I would commit that this team will try to get back to you. And if we don't the first time, you have the permission to hit us again, and we'll feel so guilty that we will get back to you. There you are. Thanks for coming.